Good morning, traders. It's Thursday, August 19th. It is my wife and I our 17-year anniversary, which is pretty crazy. Anyways, let's jump into the markets. It's going to be an emotional day, continued on from yesterday. Yesterday, we saw panic selling in the markets. We saw some end of day, real kind of selling at the lows of the day, which typically bleeds over into the next day, and we typically see a big gap down. That is poised to happen this morning. If we look at the indexes, Russell's down 1.6, Dow down 0.9, SP 500 down an eighth of a percent, NASDAQ down about 0.6%. Now, overall, we started to see panic selling ramp up on the 30-minute chart into the closing bell. The market pushed down below the 20-day, going into an oversold territory, and we saw the VIX spike. And when we see all that happen, especially if the dollar moves up, we tend to see the markets gap lower. Talked about this yesterday. And how, actually, I think it was with the TIBT members, but we talked about how we're most likely going to see a big gap down. It's going to come and tag this 50-day down at the bottom here and potentially put in one of these type of big reversals over the next couple of trading days here where everyone panics out today. They started to panic yesterday. Today we're going to see probably a huge pop in volatility, huge VIX spike again, and everyone ejects from their play, and it really just puts a bottom in the market. And this is what I drew last night on the SP 500. If we look at the futures this morning, you can see where we are this morning. We have continued to sell down. We've tagged that 50-day moving average pretty much right on par with, it's going to be a big gap. If we take a look at the 30-minute chart, this is only regular trading hours, so it is set to gap down just above the 50-day, but it has come down and tagged it more or less in pre-market. So I wouldn't be surprised we see this gap down. We could see some more selling in the early morning as everyone kind of jumps on the bandwagon and panics out of positions. We see a flush out, and then we could see a big sharp reversal today or tomorrow. You can see how we've seen this happen in the past. It comes down, the next day it flushes down, reverses. We saw a flush down and reverse. It came down, flushed down the next day, reversed to the upside, and so on. So that is the type of play that we are kind of getting into. You can see how volume is ramping up. The markets tend to sell off with strong volume. Strong volume tells us there's people running for the door. We're probably going to see the panic selling index spike up pretty high today. I would think it would be above 5, potentially much, much higher, over 10 or 20 potentially at some point this morning. We'll see how it goes when the opening bell goes and everyone kind of, the panic surges through everyone's veins. But if we take a look at the VIX here, we can see how the VIX popped into the closing bell, fear going up, and we can see panic selling in the shares on the New York Stock Exchange, which is a screen indicator, spiked up. VIX is up again this morning over here. It's up another 11, almost 12% this morning, so it's back up to a previous spike high that we've seen on the chart here. And yeah, it's just going to be an emotional day. Now, in the grand scheme of things, it shouldn't be too bad. It's not the end of the world. NASDAQ's only down 0.7%, which is a typical day. We'll see where the retail sector ends up opening. It is set to open down at 91.17, so down near these lows over here. IYR is down at 105.50, so it's hard to tell with these two ETFs. They don't really have any liquidity pre-market, but overall, everyone's panicking today, but the market's only pulling back, less than 1%. Yet everyone's running for the door. So this is typically a good sign that the market is going to put in a bottom when everyone is panicking over really, at this point, it's a very small move. It's just over 0.5% move on the NASDAQ, SP 500, not even 1%. So that's what's going on. If we take a look at, let's take a look at some currencies here. Let's just take a look at the US dollar. US dollar yesterday was flirting up near these highs of breaking out. It ended up pushing this morning up a bit higher, which is causing some selling going on. You can see most other currencies are the opposite. They're going down and to the right or sideways at best, down and to the right. Big sell-offs in the last few days. Canadian dollar really dropping as well as oil is tanking again today. But more or less, if we go to the US dollar, we go to the weekly chart, you can see we got this big W formation, a double bottom. if this pops and breaks, we're going to go very quickly up to this around 94.70. Really, the next key level is going to be really about 96. If we get a big pop in the dollar, that could mean we have more selling in the stock market. Typically, the dollar rallies when the stock market collapses and everyone globally is selling off their shares, which is what's happening. All the overseas indexes are dropping, and money goes liquid, goes to cash, and then they move to the currency of choice, which is generally the U.S. dollar. So we could see a lot of pressure on precious metals if this dollar does start to take off and the stock market goes into a deeper correction. So that's what we need to be aware of. If we take a look at the indexes, let's go to the daily chart. You can see the Nikkei is down 1.5%. Euro stocks down 2.25%. Big red bars. We got the DAX down 2%. So there's definitely some pretty big selling going on overseas, and we'll see if the U.S. market picks up speed. You can see how the U.S. is down 1.9, 0.7. The Russell's down 1.75, back down to these lows on the Russell. So definitely a little bit of selling going on today. Now, if we look at crude oil, crude's down 3.4%. It is breaking this really critical support level. Originally, we had this move up and pulled back, and then it started up, hit that next target, which was that 77, 78 target. Based on this previous momentum, was going to bring us up there. If we were to just quickly draw that out, you can see we got the low to the high, down to this low. More or less, we were looking for it to push up to 77, 78, somewhere in this area. I think we actually went from closing wicks where they closed here, which is the most conservative way to draw Fibonacci, and it brings us up into that area, and now we're breaking down. So it broke through as resistance, found it as support, and now it's breaking down. Crude could very easily come back down to this 56, 57 range. That will send the Canadian dollar sharply higher, and that's going to put a lot of drag on the energy sector stocks, which we were in, and we took some partial profits, and then we got out the rest for a small loss on the balance of it because the energy sector was rolling over. And when the markets and the charts are saying to get out of something, as much as we hate to move out of a trade, it is sometimes just the best thing to do. You don't want to fight the trend and hope and pray. We're going to see, this is XOP, which is the oil and gas. It has broken down. It really flatlined here with a bear flag. It's got potential to have a pretty big break. Not that we're in this, but I'm sure some members are still holding on to it because it's just human mentality. You don't want to be sell a losing trade because it means you're taking a loss and you're wrong, and people don't like that feeling. But the reality is XOP is set to open down at 73.05. Right down somewhere over here, but it has potential to drop a lot further. It's got potential to drop another 15% from where we are. We'll see if it comes down and finds support somewhere over here in the next couple days. It could put in a big shoulder or something. This could end up being a very large head and shoulders pattern going forward. You'd have a shoulder, a head, some type of bearish flag shoulder, and then there'll be this neckline across here that when it breaks that neckline, that's when it really goes into a full-on collapse and breaks down. So that's just kind of giving you a visual of what could happen in the energy sector. And also when the charts break down and you get stopped and your protective stop gets hit, you want to get out because these things can continue to go for a lot further. And if it's in a downtrend, it's more likely to continue in a downtrend than it is to move higher in reverse. Let's take a look over at metals this morning. Gold, you know what? The FinViz chart is the best chart to give you a feel for this. Take a look at metals. If you look at all the metals over here, we've got red across the board, big selling in copper, platinum, palladium, down 3.8%, 3.7%. Obviously, these are not safe haven plays, including silver. Gold is the global kind of safe haven metal. It generally almost always holds up way better than everything else. When there is fear in the market, people don't pile into silver. Silver is a speculative play. more times than not, gold will hold the best value, and money moves either into the US dollar or they'll go into gold or both. And you can see how that is definitely holding its ground versus all the others that have been down and to the right and really picking up speed. So overall, gold is still kind of the safer of the play, always has been, and that's just something to keep aware. But we're starting to see some pretty strong selling in the miners. I think overseas the miners were down pretty sharp. Let's just see where we're at here. Miners, GDXJ, set to open slightly lower, not a whole lot of insight there. Let's just take a look. SILJ is set to open at yesterday's lows. So if we were to just look at the silver miner chart here, you can see here we closed below this critical level. I drew on the chart yesterday in the pre-market video. We got this really critical support level that it closed below. That is not a good sign. It is set to open back down at the low, the wick lows here around 1245, somewhere here. This could really let loose and could flush down in a pretty big way. Talked about how $9 could be the next huge kind of flush out low in miners. And because miners traded in this range here for so long, and it got so much media coverage and hype with the masses all piling in, there's a lot of money built up in here that when it finally gives up and panics out, it could create that very sharp drop, which down at $9 would be obviously, I think, a pretty killer level. It would be a measured move. It would be a level where I think we see big buyers step back in. But there's a lot of money here that needs to get shaken out and take a nasty loss before they actually eject out of this trade. And of course, all this, when it's range bound like this, is more or less trading on speculation, just hoping and praying it's going to break to the upside. I am bullish on precious metals long term, but it doesn't mean they're going to go up right away. There's still a lot of work to be done, and if it's trading sideways, it's kind of dead money. If it's trading down, it's dead money. You want to get in when it's got patterns and everything is following suit. You got the dollar falling, you've got gold, silver, miners, and all moving in strong trends, not all moving lower. Again, if we look at GDX, the large caps for gold, they're back down testing these lows, set to open lower again today. They're just not in favor. They were starting to get favor, very, very primed and ready here, but then the dollar had a big move and collapsed and took the wind out of the sails. So definitely the precious metals sector under pressure and could still be for a little while. Let's just see how that unfolds going forward. Let's take a look over at bonds. 0.5% to the upside. We've been talking about this. You can see the analysis we drew yesterday on the charts. More or less, this is primed and ready to continue to move up as fear moves into the market, which we're seeing today. People call their advisors, they call their brokers, they say, hey, liquidate all my stocks, I'm scared, just put me in bonds. It's just a natural reaction, and so when people are nervous, bonds tend to move up. It's got this nice bull flag. I think it could continue to push higher and get back up into this upper range over here where just before it kind of broke down and started a very sharp descent. Let's go check out the band hot list. Not a whole lot really going on over here. Actually, let's go back, check the Russell. Russell is a good indicator of what's going on in terms of the overall speculative side of traders. This is a lot like the silver chart when we look at how much price is traded more or less in this range. This is a lot of price action trading through here. Just like silver, there's a huge positions being built up. A lot of people betting on an upside move, half the people betting on a downside move. The longer it trades sideways, the more of those positions get heavily weighted and they just keep building. And eventually, whichever way breaks is going to create a really big move. Half of these people have accumulated, and the longer it's traded sideways, it just is more and more shares accumulated of people betting on a breakout to the upside or a break to the downside. Those positions just keep building, and if it starts to break down, we're going to see a massive unwinding in the small caps and see a very sharp move to the downside. If it finds support and breaks to the upside, we already know the upside potential. Russell could rally 30%, and the markets right now are testing support, testing everyone's emotions. We got panic selling. It's oversold. It's at support. We got high volume. So there's definitely confirmation that people are dumping their shares. And we'll see if this puts in a low this week in the markets and where things hold up. But definitely a critical level here for small caps if they need to find a bottom here and hold up, or we could start to see a bigger unwinding. Let's take a look at IYT, which is the Transportation Index ETF. It has been flagging down and out of favor. Typically, we want to see this moving up, and it has been showing a little bit some signs of life. It is pushing back up to the 50-day. Now, obviously, it's still stuck under resistance. Let me zoom in a bit more here. You can see it's under, really, this is a pretty critical level on the chart. If I just draw a line right across here with support back there, traded through it. So we've got a support zone. We've got, it was support, 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 and then became resistance, resistance, and it is resistance still. But if we take a look, it is starting to break kind of this, you could argue here, there's a bit of a descending trend line down through here. It's kind of popped up through it. It's fading back down. If it can get some traction and break above 258, we could start to see that the transportation index is a good leading indicator that the market it could start to go a lot higher. So we'll see if this starts to become a bit of a bottom formation where it's come down, it rallied back up. So we got a low here, came back up, came back down. Maybe it's going to put in a triple bottom, or you could argue that's an inverse head and shoulders. If it can get traction and start to break up here, we're going to have a nice a move, and that would mean the Russell would find bottom as well, and the stock market in general. So we're just going to keep our eyes peeled, let the emotional day play out. This video is dragging out a bit, but anyways, that's it for this morning. Talk to you in a little bit. Bye-bye.